Hi, I'm Todd Rosenbluth, Head of Research at VettaFi, and I'm excited because Avantis just celebrated its 3-year anniversary, and we get to talk to them about it. I'm here with Eduardo Repetto of Avantis, the Chief Investment Officer, and I'm excited to be able to talk to him. So, Eduardo, thanks for joining me.
It's a pleasure. Thank you for having me here.
It's my pleasure. So congratulations. Avantis ETFs have hit the 3-year anniversary. You've had 5 products that initially came to market and have expanded them. What do you think has been the success behind this?
Look, we are very proud of what we have achieved. So we are extremely happy with the trust that so many investors have put on us. We take our job very, very seriously. We started with an idea of delivering great investment solutions to embrace cutting-edge innovation and to have very attractive expense ratios. And of course, to focus on very good service. And that has paid off. So wealth managers, advisors, institutions, and consultants have been open-minded. When you start, you are new. They say, should we listen to these guys? And they have listened to us. They have embraced our approach. And part is because our approach that is it's based on financial science, but also on a very good implementation. Part also because of our own personal reputation. We have been in the years for industry. And also partly because of our affiliation with American Century, that is an amazing institution. Avantis, as you know, is a brand inside American Century, and none of what we have achieved could have been done without the support of American Century. So our ideas, our implementation, our reputation, working together with American Century has probably been a deciding factor in our success.
You mentioned a number of different stakeholders, but let's talk about advisors. How have advisors embraced the Avantis ETFs?
Look, it's impressive how much they have embraced what we are delivering. So remember, over the last 3 years, we have difficult markets. Remember the pandemic, the market downturn in February, March 2020, not only because the market went down, also our inability to travel to visit advisors and have meetings face to face. That was a big challenge. Now, year to date, we have a difficult market. But despite all that, it's impressive how much advisors have embraced what we have to offer. We have a whole set of products, now 18 ETFs, that advisors have been looking and using in their asset allocations. Early in the year, we crossed 14 billion in assets under management. Year to date, our cash inflows are really, really strong. So I think that what happens is that we strive to provide investment solutions that can improve the asset allocation for advisors. We care about products that fit seamlessly in their asset allocation to add value. And also we provide great marketing support with frequent webinars on relevant topics. Can be behavioral finance, can be investing, can be trading, that can add a value to the advisor. And we provide also marketing support so advisors can use our support when they are communicating with the client. So all these things together probably have been part of the success we have with advisors.
Now, you touched on the broad suite of ETFs. They're all actively managed. But what are some common characteristics of the Avantis ETFs?
Yeah, look, if the first ETF that you saw in the market were index ETFs. ETFs tracking an index. And indexes have delivered some advantages to investors, so like tax efficiency, low fees, low turnover, transparencies. But indexes also come with a lot of drawbacks. For example, indexes don't use current market information, current prices when they decide to buy a security or to hold a security or when to sell a security. They use lag data. Also, indexes concentrate all their trading in particular days of the year, and the most popular indices have a lot of money under management. So when the trades happen, probably they push prices because the liquidity demand is much more than the natural liquidity securities in the market. So Avantis ETF, what they are doing are trying to keep all the benefits of indexing. So tax advantage, tax efficiency, low fees, low turnover, transparency. But we are also trying to add value by considering the price of every security when they're deciding when to buy or when to get rid of a security. All of us recognize that every investment is a good investment at a given price. And so you have to consider price whenever you're making investment decisions. And you cannot say, I'm going to hold this security for the next year, because who knows what's going to happen with the price next month, 2 months, 3 months away from now. So every day we're looking at prices and fundamentals in order to decide, should we keep the security that we have in the portfolio, or should we change for another security that is more attractive from the expected return point of view. So we really provide all the benefits of indexing with improvements that are based on just better science, better implementation, and using current information.
So let's talk about a couple of ETFs in particular. So AVUV is one of your more popular ETFs. What makes it stand out versus the relevant index, perhaps the Russell 2000 value?
Yeah, AVUV is our Avantis US small cap value ETF. It's quite innovative because what we're trying to do in our value strategies, not only in small value, but US small value, but all our value strategies, we're trying to identify what securities the market is pricing at a big discount. So if you think about the net present value of an investment, no, you have the price today has an embedded discount rate. And why that matter? Because that discount rate is your expected return. So when a market is pricing something at a big discount, that investment has higher expected returns. So we use financial science and current information and data in order to try to identify better than others what securities are priced in the market at big discount that are expected to deliver higher expected returns to investors. That's different than the typical value strategy. The typical value strategy just cares about buying low price securities. And look, you can have low price security for many reasons, like you have tons of liabilities, you have no operating losses or very low profits. And those securities that have a low price for a reason is like buying cheap sushi. Do you want cheap sushi, or you want sushi for a good restaurant that is priced at a discount? That's what you want. You want the value investing, something that is priced at a big discount. That's it. That's what's expected to deliver to your portfolio. And that's what we deliver in our AVUV.
Well, I can't wait to hear the analogy that's going to come with AVUS, which is a core equity strategy, a broad market product. How are advisors using your core ETFs?
So AVUS is our Avantis US equity ETF. We have a US equity and international and emerging markets. And also we have the responsible strategies that also consider similar approach, market-wide approaches. So AVUS is a US market-wide strategy that what it's trying to do is deliver a risk profile similar to the market. Think about the Russell 3000, for example. So it's trying to deliver a risk profile similar to the market. But when you have a Russell 3000, you have a market portfolio, the only thing that it considers is the price in order to decide the weight of the security. If the security has higher price, has higher weight. If the security has lower price, has lower weight. In reality, it's market cap, so price some shares at the standard. But there is absolutely no consideration for expected returns. And so what we do is we try to consider expected returns when we decide how to weight securities. We have a broad set of securities, but instead of just weighting them by market capitalization, we're willing to deviate from market capitalization to overweight those securities that are expected to deliver higher returns and underweight the securities that are expected to have lower returns going forward. And by doing that shifting weight, we achieve a portfolio that has similar risk characteristics than the market portfolio, but much higher expected returns. And again, our goal is to deliver good investment solutions so advisors can use in their asset allocation and they can benefit their clients. We are here to help advisors help their clients.
Well, that's great. I appreciate the insights and the expertise, and I know the audience did as well. So thanks a lot.
You should consider the fund's investment objectives, risks, charges, and expenses carefully before you invest. The fund's prospectus or summary prospectus, which can be obtained by visiting avantisinvestors.com or by calling 833-928-2684, contains this and other information about the fund and should be read carefully before investing.